Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so we typically look at the charts that move the week, so to speak, so key container leasing and trading rates. But today I'd like to pretty much emphasize only our latest China market update for October 2024, and that we released just yesterday. So it's hot off the press. Why is this relevant? Well, we take a deep look into the China container trading and leasing market, particularly on the container prices that plateaued since a couple of weeks now, and of course, one-way leasing rates ex-China, trans-Pacific into the US. Why is this relevant? Well, we have a lot of geopolitical factors at play right now that make the forecasting of these prices and hence investment planning and also transaction planning of our customers, container lessors, container traders, but also NVOCCs, freight forwards, particularly challenging. We have the domestic economy in China that is sputtering and is being propped up or supported quite a bit already by the Chinese government. We have the situation in the US, sort of everybody's looking at November at the election, awaiting the outcome eagerly. It's going to be a very, very close and tight race between Kamala Harris and Donald Trump. And of course, the outcome of this election will impact policy going forward, both on the tariff side as well as on sort of other trade measures and domestic fiscal policy measures. Then we also have the upcoming situation or the persistent situation at the US East Coast and Gulf Coast ports. The strike has been averted after just 3 days, but the big ticket item to be resolved in negotiations between the employers and the unions is still on the table and unresolved, and that's automation. The US ports rank very, very poorly in terms of automation and efficiency. And of course, that's a disadvantage in an increasingly and continued sort of globalized world. And then, of course, we also have so other sort of factors at play, be it interest rate developments going forward, be it economical factors going forward, be it also Chinese New Year next year that already starts end of January. And so there's a lot of discussion around whether the pull forward effect of orders that we've seen sort of this past peak season, which has prolonged the peak season, pulled it forward and sort of let it be pronounced quite significantly. Whether this effect will continue and retailers in the US, importers in the US will continue to pull forward orders before Chinese New Year quite heavily, because right after Chinese New Year, we then have the inauguration of the new president, be it Kamala Harris or Donald Trump. So there's a lot of discussions and a lot of factors at play, and we take a stab at that in our China market forecast. At least that's one piece of the puzzle. And we will continue to do research in this. And also we're working on a quite interesting piece around the buy and repo business case. How profitable is that? What are container price expectations right now, and how do they play its part? Now, there's a lot of sort of content that I've just dumped onto you. Do have a read of our China market update for October, and we continue to release analysis that will allow you to make more informed decisions around container investments, container trade, container repositioning, container usage sort of decisions. Thanks a lot, and talk to you all on Friday. Take care.